Hi everybody, welcome to another monthly market outlook by Atlas Wealth Management. For more information on our services, please go to our website at atlasbuildswealth.com. We also have some articles, and you could also download a free retirement calculator. Welcome everybody to another monthly market outlook by Atlas Builds Wealth. This is Ron Lang. First thing we're going to do is look at the S&P 500 chart and see where we were, where we are, and where we're going. And for the most part, as we identified in these two areas here, would really dictate either the price range and or the conviction direction that the price action would go. Since the European debt issues were subsiding and some positive news came out, you could see this positive uptrend going towards the 1400 level on the S&P. Back in the beginning of June, when we did our equity review, and you can get that off of our website, we identified about a 5 to 15% move on the S&P leading into the elections. So we are headed in that direction, and we believe that we may get a little bit more of a pullback here before we shoot higher over 1400 as the political conventions are right around the corner. Again, not too many major issues came out. We had an issue in early June that was pretty much our bottom that hit this range here. But for the most part, it's pretty much been on a steady climb with a little bit of EKG in there. We're going to see what comes out with the Fed, and we're going to see what comes out with the ECB over the next week to determine some of the next steps that will help in the European debt crisis. So what are we looking for here? We're looking for continued up movement throughout the balance of August, probably to the 1400 to 1420 area. We really don't look at it as much above or below that, considering we think it will definitely touch, perhaps briefly breach these highs here that were set in March and April. And then from there, we'll have to see how August goes, but we believe it'll go a little bit higher before it peaks out before the elections. Let's look at our market leaders. First, we're going to start out with Apple. Apple's been on a pretty good run over the last year, as everybody knows. Hit a peak in March, pulled back, and now that it has the new product cycle coming out with the new iPad 5, the iPhone 5, the iPad 3, and potentially the announcement of some other new products like Google TV, had started to propel the price action in the last week. So we look at the price action probably coming back to the 430, 440 level before September, October, and then when the September release of the iPhone hits, if it's a huge hit, and there's some real technological advancement there, we could see it making new highs. ExxonMobil, despite the price of gas, they've pretty much been in a nice uptrend since early June when the S&P hit its lows and has been steadily getting higher, trying to make, breach, and sustain new 52-week highs. Microsoft, after being on a nice run a few months ago, pulled back and now has been pretty much range-bound between 28.50 and 31.25. We are looking for a break of 31.54 and then a break of 33 to really see some additional conviction here. The product cycle is pretty much the same with Microsoft. We'll have to see how those translate into their earnings numbers and any new products they might do. After a brief basing and consolidation here on Walmart, it really shot up much higher, came back for a brief pullback with the market on those couple of 100, 200 point day drops, and now has hit new 52-week highs. We're looking for a little bit of a pullback in Walmart before it goes higher. IBM is still trying to regain its footing after making some very nice highs in March and April in a double top formation here. So what we're looking for here is more conviction. IBM makes a pretty good percentage of the overall Dow components. So if we could see some conviction here of this going higher and breaching this $200 level, we think it could easily hit 205 to 208 very quickly within a week or two. Telephone has also just been on an absolute tear since the April-May timeframe. It has constantly gone up, going from about a 6% dividend. Now it's still paying around a 5% dividend. At a full disclosure, I am long this trade, getting a very nice dividend and writing calls against it. Although the writing of the calls is almost a break even, the capital appreciation and the dividend play has been worth it since I've been in this trade since last August. But you can see here just the steady price action and why. People want to be in those dividend payers, and Telephone is an excellent dividend payer. They're printing money, they're a cash cow, so why not? GE is now forming a double top formation. There's been some real good money flow going into it. You can see some nice bullish volume spikes going into those days, going from 1954 all the way up to the 2075 level. We're looking for a break of 21 for a new plateau, new consolidation level around that 2150 to 22 level. Chevron, still trying to figure out where it wants to go here. As you can see, it's just been very range bound at the 110, 111, all the way down to that 94 to 96 area. So we've been on a nice uptrend here since early June. Now we're trying to figure out what the next steps are. We might get a pullback to this consolidation zone here before we go higher. A lot of that will dictate on oil prices and the overall market direction. Google's had a very nice run here over the last couple of weeks. It finally broke this downtrend here since April. Broke this one level here, coming up to the 650 level. So the 650 to 660 level will prove as very difficult resistance, as Google is now battling with Facebook and several other companies for those advertising dollars on the internet. Procter & Gamble, there's been some activists and some major hedge fund investing in Procter & Gamble that sent it going up in mid-June. And you can see here the price action that it's been on. I mean, Procter & Gamble is one of the largest companies in the world and one of the largest consumable companies. So even if people feel as if that domestic and global spending is going down, people are still going to spend on the basic consumables for their everyday eating habits. Coca-Cola, as you can see here, has been on a very nice price run. And one of the things that we see here is that they did declare a 2-for-1 split. So it should be interesting to see how they actually break up the company, how they unlock shareholder value. But since they announced the split, I believe it was right here in the April-May timeframe, you can see it's been on a pretty nice steady uptrend and also pays a pretty good dividend. McDonald's has been a little bit of an anomaly here. After breaking new all-time highs here in the 100-102 range, basically it's been struggling mainly with international and even more specifically European slowdown. So we could see a lot of their quarter-over-quarter and same-store sales have been going down. A lot of analysts that I listen to and respect really see that McDonald's is a buy in the $80 to $85 range. So you might want to wait for additional pullback on this until you consider getting into that particular trade. Home Depot, which was on a long-term tear here up to the $50 level, had pulled back, regained that $50 footing, and is now trying to figure out which direction it wants to break out in a range. If we could see some conviction here with the housing numbers, which we started to see over the last few weeks, perhaps we could see a breakout of the $53, $54 level over the next month. Caterpillar has also been struggling as they've been trying to figure out globally, where they stand, and it really has not been able to break this long-term downtrend. And until it really breaks this $95 level to get over all this resistance here, and very poor and a lot of big down day strike actions, it's going to be very difficult for Caterpillar to really find its bullish footing. So we shall see, but I believe the $95 level is going to be the critical level for Caterpillar to look for more upward momentum. And as you know, we like to follow the transportation index as a way of determining the direction of the market. And when the transportation index did not hit new highs back in April and May over the S&P, we knew that the momentum was going to be very difficult to sustain. And as you can see here, it was. I mean, this is extremely volatile action over a 2.5 to 3 week period of time, especially for this particular index. Even though it's in a downward slope, I would still consider this being range bound. But until it breaks this $5,300 point range with conviction, it's going to be very difficult for the S&P to break through the 1400 level with some substantiated momentum. Thank you for attending another monthly market outlook video by Atlas Wealth Management. Visit our website at atlasbuildswealth.com for more articles and also other event dates. Thank you for attending.